This morning, as we head into Wednesday's trading session, Opendoor finds itself at a fascinating crossroads. After several sessions of selling pressure and profit-taking, the stock closed Tuesday at $7.98, down 23 cents or roughly 2.8%. Yet beneath that surface-level decline, some very interesting developments have emerged, developments that could signal the beginning of a shift back to positive momentum. In today's pre-market update, I want to walk you through the big storylines heading into midweek: Eric Wu's large insider purchase, the imminent launch of Opendoor's new buyer-side product in Texas, the ongoing influence of Keith Rabois and his high-profile network, and the way retail sentiment is evolving. Together, these factors might point toward a potential turning point for this stock. Let's begin with the most concrete data point: insider buying. According to a Form 4 filing on Opendoor's investor website, Eric Wu, the company's co-founder and former CEO who recently returned to the board, purchased 300,752 shares at $6.65 per share. This is his second insider purchase since rejoining the board. It's no small commitment. At that price, it's roughly a $2 million buy. In the world of investing, insider purchases by executives who know the business intimately are often seen as a strong vote of confidence. They're not merely holding the shares they already own, they're actively reaching into their own pockets to increase their stake. That tells you they believe in the upside ahead. For long-term Opendoor holders, Eric Wu's purchase sends a powerful signal. It says, "I'm still here. I still believe. I'm putting my money where my mouth is." And it's not just the size of the purchase, it's the timing. He's stepping in after a volatile stretch in the stock's price, a period of uncertainty as the company reorients under new CEO Kaz Nejatian. That's why I jokingly call him Astronaut Whale Wu. He's not only a founder and a veteran of the iBuying space, he's now the guy loading the rocket at what he perceives to be bargain prices. In an environment where retail sentiment can be shaken by short-term swings, this kind of insider action helps steady nerves and reinforce conviction. Layered on top of that insider confidence is something even more tangible for the business itself: product innovation. Kaz Nejatian announced on Tuesday that Opendoor's new buyer-side product will launch in parts of Texas on Wednesday. The tagline Kaz used, "We don't want you to own a house, we want you to love a home," speaks volumes about the company's strategic direction. This isn't just about transactions anymore. It's about building an ecosystem where Opendoor becomes synonymous with home discovery, home buying, and even home enjoyment. For years, critics have dismissed Opendoor as a glorified home flipper. But initiatives like this new buyer-side product show that the company is pushing far beyond the narrow confines of its early model. The goal is to engage potential customers much earlier in their journey, a full year or two before they're ready to transact, so that when they finally do decide to buy or sell, Opendoor is already top of mind. If the Texas rollout goes well, it could mark the beginning of a broader shift in how the company interacts with buyers and sellers. And because Texas is one of the nation's most dynamic housing markets, it's the perfect proving ground for this next phase of growth. It's worth noting that this approach also positions Opendoor to collect valuable data on buyer preferences, browsing habits, and market trends. In a world where Zillow averages hundreds of millions of unique visitors per month, many of them just window shopping, Opendoor's challenge is to capture and convert some of that attention. If they can become the go-to platform not just for transactions but for inspiration and planning, they'll be in a much stronger position to cross-sell services, introduce AI-powered features, and deepen customer relationships. All of this adds up to a more defensible, more scalable business model than the old buy, renovate, and flip narrative that skeptics still like to trot out. Another factor worth considering heading into Wednesday is the leadership team's network and credibility. In recent days, Keith Rabois has posted photos with both Donald Trump and Benjamin Netanyahu. These images have sparked debate online, some people upset about the optics, while others see them as evidence of Keith's clout and reach. Regardless of where you stand politically, there's no denying that Rabois' connections run deep. He's a PayPal mafia veteran, a venture capitalist, and a Silicon Valley insider with relationships that stretch from tech to politics. Having someone like that as chairman is an asset. It signals to top talent, strategic partners, and potential investors that Opendoor is serious about its mission and well-connected at the highest levels. And that ties back to Kaz Nejatian's own tweet from September 28, where he said Opendoor is about to welcome some insanely awesome talent, people leaving big tech companies because they believe in the mission of making home ownership more accessible and more delightful. The combination of insider buying, new product launches, and top-tier talent coming on board creates a compelling narrative. Opendoor isn't just surviving, it's evolving. It's becoming a magnet for high-impact people who want to solve a massive, real-world problem. That's exactly the kind of story that long-term investors want to see. Meanwhile, on the retail side, Eric Jackson continues to work hard to galvanize the OpenArmy, the community of small investors who believe in Opendoor's long-term vision. In a recent post, he framed retail traders as a potential rising dynasty, capable of breaking out of the middle class with one or two breakout plays. He contrasted this with Wall Street's traditional approach of selling soft strategies through ETFs that enrich the funds but rarely deliver life-changing gains for ordinary people. Whether you agree with his framing or not, there's no question that this rhetoric resonates with many in the OpenArmy. It reinforces the idea that holding through volatility is part of a larger, values-driven movement, not just a stock trade. All of this leads to an interesting setup heading into Wednesday's trading session. On one hand, the stock has cooled after last week's rally, drifting lower over the past 2 days. On the other hand, we now have a major insider buying at scale, a new product launch happening in real time, and a leadership team that's actively signaling growth and innovation. That's a powerful mix. Historically, when you see insider confidence align with new initiatives and stabilizing price action, it can mark the beginning of a new phase of momentum. To be clear, nothing is guaranteed. Stocks are volatile, and Opendoor's journey from a beaten-down iBuyer to a tech-driven home ownership platform is still in its early stages. But the pieces are falling into place: a CEO who's transparent and moving fast, a founder who's buying shares instead of selling them, a chairman whose network spans politics and tech, and a retail base that's holding on despite turbulence. These are the ingredients of a potential turnaround story. So as we look at the pre-market indicators this Wednesday, the key question is, will this be the moment when the selling pressure finally subsides and buyers regain the upper hand? If the answer is yes, it won't be because of hype or speculation. It will be because the fundamentals of the story are improving. Insider buying isn't a guarantee, but it's one of the most credible signals you can get. Product launches aren't always instant successes, but they're the lifeblood of innovation. And talent inflows aren't visible on a balance sheet right away, but they shape the culture and capabilities of the company for years to come. That's why this Wednesday session is so important. We're not just watching a stock price, we're watching a company try to reinvent itself. We're watching a leadership team put its reputation on the line. And we're watching a community of investors decide whether to stay the course or bail out. If you're part of the OpenArmy, the developments of the past 24 hours should be encouraging. Eric Wu is buying the dip, Kaz is rolling out a product designed to deepen customer loyalty, and the price action is starting to show signs of stabilization. That doesn't mean smooth sailing ahead, but it does mean the long-term thesis is intact. In closing, my message to viewers heading into Wednesday's pre-market is this: Opendoor's story is not about a single quarter or a single catalyst. It's about building a platform that can transform how people buy and sell homes, and doing it at scale. The insider purchases, the new product launches, the high-profile connections, these are all pieces of a much larger puzzle. If the company executes well, today's volatility could end up looking like a small blip on a much bigger chart. That's the perspective Eric Wu seems to be taking, and it's the perspective I encourage you to consider as well. We'll be watching closely as the Texas launch rolls out, as the new product link goes public, and as the market reacts. But for now, heading into Wednesday's open, the story is one of cautious optimism. The rocket is being loaded. The Astronaut Whale is on board. And the mission to make home ownership better for millions of people is still very much alive.